When it comes to saving for retirement, many Americans are feeling the squeeze. A recent study found 1 in 4 Americans have cut back or completely stopped putting money away for retirement because of inflation concerns. But this could seriously derail your financial future. Here to explain the inflation risk and how to protect your money is Chris Fucci, Managing Director of 3 Generations Financial. Chris, thanks for taking a couple of moments for us. We appreciate it.
Sure, thanks for having me.
So why is inflation such a risk factor for retirement?
And the risk of inflation really equates to investors and clients' purchasing power. And historically, the inflation rate has been around 3%. We've seen heightened inflation over the last year or so, upwards around 8 or 9%, which does not include food, and energy, which have gone into double digits. And just to give you an illustration of that, at current inflation rate of around 5%, if you had $10,000 invested at around a 6% rate of return in 20 years, you'd have $32,000 in your investment. However, the purchasing power would only equate to about $12,000.
So let me talk about inflation now. And people are sitting there, they're seeing prices are sky high for this and sky high for that. Gas seems to go up and down, whether it's eggs or whatever you're buying at the market, the prices seem to fluctuate. How does it impact, when we're talking about retirement now, how does inflation now impact your future?
Future dollar has essentially been eroded. When you're looking at the cost of your expenses have now doubled or even tripled, and your investments and or your income has not kept up with that. So that's a significant concern. When we do comprehensive planning with clients, there's a lot of variables, and that's one of them that needs to be addressed. I think it's a significant risk, even more so than market volatility, right? Your dollar needs to be worth $1 tomorrow to keep up with goods and services.
So one of the things we talked about, this recent study found 1 in 4 Americans have cut back or just completely stopped putting money away for their retirement. What is your advice? What do you tell people now?
I hear that often. I can't afford to save any money in today's environment, but I think you can't afford not to. So you have to pay yourself first and get on a more regimented savings program, whether it's through your employer or individually on your own, to deal with that. That's one way to combat the rising costs. You have to save money.
Well, let me ask you this, because you get to something that I want to get to now. I know you provided a checklist for us for the younger generation of what they need to do to start putting money away, so when they do have retirement on the horizon, they're in a better position than it seems like a lot of Americans are in now from the stories that we're hearing. Let's go over some strategies here for a younger person looking for that longer timeline for retirement. I know you just mentioned it a second ago, but I want to touch back upon it again. You say start small, always pay yourself first. Next, you say budget, set goals, and increase your savings when you get a raise. Finally, determine the best places to save your money. And for the last point, what do you suggest here? Where are the best places for young people to save right now?
Yeah, there's 2 buckets here. One is the short-term savings, which is more of a cash reserve, certificates, CDs that are paying a fair rate, a high-yield savings account. And then the second bucket would be their retirement savings, which we would suggest looking at your employer. If you are employed, they may have a sponsored plan that may offer a match.
All right, so let's talk about now people that are closer to retirement. A lot of us have parents, baby boomers, retiring, close to retirement, don't have the savings put away that you wish they had put away. You say, for people that are closer to retirement, these are your suggestions. Check and revise your financial plan. Consider the age that you're going to retire and take Social Security. And finally, think about what kind of investments you have. So on the investments, what should people consider that are close to retirement on the investment front?
Historically, a balanced portfolio is a great way to mitigate risk, to deal with inflation, et cetera. Some of the asset classes that have outperformed or at least hedged against inflation have been equities, stocks, commodities, real estate, inflation-protected securities. They have the ability to adapt to inflation.
But if you're closer to retirement, whether you're 20 or whether you're 65, save, save, save. Any opportunity you get, save. That would be the big takeaway here, correct? Save as much as you can when you can.
Absolutely.
All right. Chris Fucci, Managing Director of Three Generations Financial. Chris, thanks for taking a few moments. We appreciate it.